Computer Chronicles is made possible in part by PC to PC, the online computer migration service from PC First, moving files, applications, and preferences from your old computer to your new one. Additional support is provided by Upside Events, presenting the Digital Lifestyle Revolution Conference, where people and technology intersect.
Hi, and welcome to this special edition of the Computer Chronicles. We are in Prague in the Czech Republic. This is part 2 of our coverage of ETRE, the European Technology Roundtable Exhibition. You know, each year this conference is usually about technology, but with the wild gyrations in the NASDAQ over the past couple of months, one of the big issues here this year is money and the basic economic stability of the whole dot-com revolution.
And right now, just the best ideas are getting funded. Sure, lots of companies went out too soon, and many of them are disappearing. Yet they have great products. I mean, look at the Globe. The Globe was, you know, everyone points to the Globe as a company that never should have gone out. When it did, 2 kids from Cornell, 25 years old. You know, the stock is trading under $1 now. They do have some cash on their books. They got great leadership there with Dean Daniels and some of those other people. The product is great. They got great, well-published products, a great network, a great sense of community. But the market couldn't care less about it. So I think we have to divorce. We have this sort of like separation between the stock market and the quality of the companies that are on there. There's still lots of great companies out there, but nobody wants to own their stock.
There is another irony in today's high-tech marketplace, a slump in the public stock market, coupled with a boom in the private capital market.
Right now we're kind of at a crisis point in the public markets because of the fall of all these high-growth markets in Europe, NASDAQ especially, and that's creating a lot of hand-wringing. But you have a lot of bankers here and venture capitalists, and their picture is a little different. They're sitting on more money than they've ever had in their life. The venture capital industry is bursting its seams when it comes to money. I mean, you have something like 30 or 35 venture capital funds with $1 billion or more. So on the one hand, you have plunging valuations of technology stocks that trade in the public markets. On the other hand, in the private market, you have more money than anybody's ever seen.
On the first day of this conference, the Dow Jones Industrial Average dropped nearly 400 points, and the NASDAQ was down more than 100. So the talk here was all about the market, much of it surprisingly philosophical.
Whenever a new commercial opportunity is discovered, historically, generally Americans jump into that new opportunity with both investment feet. Overfunding occurs, lots of companies get started, and then we invariably go through somewhat of a Darwinian shakeout period at the very beginning of the cycle. Rationality sets in. We get to truly understand what that new commercial opportunity is, and then we kind of re-gear up to refine that commercial opportunity in several subsequent stages in the years that follow.
There was no question that the buzzword at this conference was profits, and the focus was on the bottom line.
It's become almost an obsession to just talk about the numbers more and more and more and prognosticate about the financials. I think for years we overdid it on the other side. We were just talking about aggregating customers and building brands, and we didn't really worry about making money. And now we're worried so much about making money that we're almost too far in that direction.
It's interesting to think about whether this new emphasis on profitability is really a good thing or not. It's good in that it induces some reality in the web environment, but it may be a bad thing in that a lot of these businesses might not be profitable for years. I mean, coming from the magazine business, we love to say that Sports Illustrated took 8 or 10 years before it was profitable. So a lot of these websites, you know, really should have the opportunity to lose money for a while. Whether they can or not, now that they've gone public and are publicly traded, is another question.
Before, people just cared about cool ideas, and that was the obsession of Wall Street, entrepreneurs, venture capitalists, investment bankers, etc. And now, the big thing is earnings, earnings, earnings. How soon are we going to have them? And, you know, for some of these businesses, that isn't really necessarily such a good question, that there are still some businesses that will require a lot more time than other businesses. But But in neither case, either in the past scenario or the present one, did people really want to take the time and the effort to look carefully at each individual business, what its requirements are, what its opportunities are, what its management is like, and ultimately, that's what you have to do to make intelligent forecasting decisions, which is what investing is all about.
There was no doubt the mood had changed here among high-tech industry investors and executives.
Market capitalization is based upon expected cash flows from a share of stock over the years, net present value. That's the way it's always worked in capital markets. So all of our employees now, in a very crystal and clear way from Joe and from myself over the last few quarters, understand that we can no longer be just a pure internet company spending money and hoping someday to be profitable. We are a blend of traditional marketplaces, traditional revenue streams, internet marketplaces, internet revenue streams, and that blend must have an E in the PE.
We have seen this year a sea change in people's mentality. They have gone from being dreamers to becoming accountants, and neither is good. Dreaming with people's money is not acceptable. Just thinking about the money in a technology world which is supposed to change society is not good either.
The big question here was, what are the long-term effects of the market downturn on the technology industry?
How much is the stock market depression going to slow the growth of the internet generally is one that hangs over the whole conference. I think, though, that the consensus is almost universally here that not very much, that in the end, the fundamental positive economics of internet business and internet commerce and just what the internet makes possible in terms of communication, these things are so transformative that they will revive the economy as a whole, and certainly they will revive the fortunes of internet companies.
But the playing field is quite different today in what was being called here the next generation of the internet.
During the next generation in internet, you will need more dollars to launch a company. Even if you won't spend as many advertising dollars on billboards and on airports and on TV that you used to do early this year and late last year, you will find yourself in a position where you need many more dollars to break into the old economy, because the old economy has started to build its own defensive strategy.
So what we saw here at ETRE was a slightly less arrogant high-tech community with some second thoughts about this concept of internet speed.
What happened is we got so enthusiastic during the first chapter of the internet boom, and there was this ethic that, you know, it was the internet land grab, and you had to get out there and you had to gain your market position on day one or you were going to lose. You know, it's turning out to be somewhat of a destructive attitude, because now we're feeling like failures.
The people in the Czech Republic have had to figure out how to build an infrastructure for a free economy after decades, of course, of communist rule. Well, at ETRE, the topic is very similar. How do you build the appropriate infrastructure for this new internet economy?
There are three things which will be important between now and next year. The three things which will be important between now and next year are infrastructure, infrastructure, and infrastructure.
That means more of an emphasis on back-office integration, more attention focused on technology aimed at corporations rather than consumers.
In order to come and have a window on the world called the internet and receive orders from customers, you need to be cost competitive. In order to be cost competitive, you have to make sure that you have integrated your supply chain management and your business processes. So in fact, when you get on the internet, you are able to propose to your customer the best price possible, and you are profitable.
IBM's approach to providing internet infrastructure is a package called WebSphere.
WebSphere is providing you from the basic web design to the highly scalable website where you can run 1 billion transactions a day like we have done during the Olympics, where we had peak at about 1.2 million hits a minute some days. But WebSphere is also providing you with business process management who allows you to integrate your backend so well that you save cost and you are price competitive when you come really on the internet to serve your customers.
The new emphasis on infrastructure and B2B e-commerce is raising doubts about B2C websites, even the icons of success like Amazon.com.
I think last year $131 billion were transacted in business-to-business commerce over the internet, several billion in consumer retail commerce. And so it's a very real business, but we're very skeptical, frankly, whether you can build a business that is singularly dependent on selling just over the internet. So in that regard, we've always felt very concerned about Amazon. We've felt that, you know, this whole concept of the internet land grab and their effort to build their top line while ignoring the reality of the bottom line was a very dangerous strategy, particularly because along the way they raised over $2 billion in debt.
There are two things here. One, some companies, they don't make money and they will never make money because they don't have a way to make money. The business model doesn't allow any room for money. Okay, let's forget about these companies. Other companies like Amazon.com or Priceline.com have the right business model, especially Amazon.com. They have managed and been successful in attracting millions of customers. Problem is, what about the back end? The price of the book, is the price of the book competitive? It has to be. Yes, the price of the book is competitive. Did they integrate enough the supply chain management? Did they integrate enough with their suppliers and their partners in order to be cost competitive on every transaction they are doing? No, they didn't do it.
So not surprisingly, everyone here wanted to talk about B2B, business selling to business, and the infrastructure companies that supply the basic weapons of e-commerce.
The companies I think of as the arms suppliers are really the place that people have a lot more enthusiasm. And, you know, when you saw a company like Ariba speak here, which, you know, as of earlier this week had a $30 billion market cap and still has a 20 billion plus market cap, I think, although I haven't looked in the last few minutes, because the markets are plunging today. You know, the reason that they have so much larger of a market cap than some of these .coms is that they are perceived to have the ability to sell to every company in the world that wants to transform itself for e-commerce.
Optimism on B2B is so high now that Ariba CEO Keith Kroc talks about buyers and sellers each getting 60% of the deal.
It's the biggest marketplace the world has ever seen. And I really believe anybody who thinks they can do it by themselves is naive. So it's all about partnering, and it's all about creating an ecosystem, and it's all about making that a core competency in your company. And in essence, I think from a cultural perspective, that's really where we started in terms of our partnering concepts. And when we talk about that 60-60 proposition where both parties get the best part of the deal.
One of the reasons for the great optimism in B2B is a new industry standard for online markets called UDDI. Unusual in that it brought together unlikely allies such as Microsoft, IBM, Sun, and Intel.
The UDDI standard is Universal Description and Discovery and Integration. That's what it stands for. But in essence, what it is, it's a common directory, a yellow pages, a white pages, that allows suppliers as well as commerce service providers to be able to hook up to that network in one common standard. So once they're hooked up for one buyer, they have access to all these other buyers and all these other marketplaces.
One of Ariba's competitors in the B2B arena is VerticalNet, and they have a very different view concerning the keys to success in the B2B marketplace.
We think cheap beats expensive, simple beats hard, and open beats closed. These are the three rules we've seen in the technology industry that I've seen for the last 15 years. Inexpensive beats expensive, Simple beats hard, open beats close. And to your point, there are certainly a lot of press releases being issued of consortiums and participants in the industry banding together and forming a private exchange where they agglomerate their buying power and use that to save money on how they procure products. Many of those will do great. I'm not criticizing them philosophically, but what I do suggest is that over a period of time, I don't know if it's 6 months or 6 years, an open exchange will always beat a closed exchange.
Mark Walsh thinks VerticalNet is poised for long-term success, while companies like Ariba are focused too much on the early stages of e-commerce.
So Ariba and Commerce One are doing a fantastic job of pushing the rock up the hill, Sisyphus-like, and getting big companies to say, oh, I understand what this internet thing's about, but we believe, as I say, that the next big growth wave is in the community features, engaging lots of vendors, and software becomes less and less and less important. No disrespect to those two companies. But we believe in a couple of years, what software platform they use to do procurement will be an afterthought. What's going to matter is what vendors are around, how many vendors you can reach out to, how you gather information, how you use community tools to do that. The transaction is immaterial.
The VerticalNet view is that the infrastructure companies are now too focused on the tools rather than the business fundamentals of e-commerce.
I tell people that folks who believe that e-business is all about software are the same people that think that retailing is about cash registers. It's not. Retailing is about product and placement and shelves and location. The cash register is simply the transaction point when the money changes hands. So right now we're fascinated with cash registers because there weren't any cash registers before. But once all the cash registers are installed, then the good old way of getting sales done in retailing is going to start to kick in.
With all the talk about B2B and infrastructure, almost no one here seemed very interested in you and me, the retail consumer.
The question of consumer technology has been almost completely absent from this conference, which probably was the top issue in the last 2 or 3 years. And that doesn't mean that it's not still, for certain companies, a good business, like Yahoo, for example. But I think, and again, this may be a fad that people believe this, but people do seem to believe that there isn't a lot of room for new business-to-consumer internet startups. And as a result, there's just not a lot of excitement about it, and there isn't a lot of time wasted on discussing it.
The one voice speaking out here on behalf of consumers came from an unlikely place, 3Com, usually thought of as a company more interested in selling to corporations. But 3Com is acting like a new company.
We believe that the perspective of the end user over the last decade has been sort of lost in all this. The industry has been such an exciting industry that we've been focused mostly on technology and on setting new performance records and new features. And over time, the user perspective, particularly the new user's perspective, has been lost. These users typically are not technologists. What they care about is how the technology is used and how simple it can be to perform a function.
3Com showed off its newest acquisition and its newest consumer product, the Kurbango Internet Radio. It looks like an old-fashioned radio, but it can access thousands of web radio stations around the world.
Here's a device which clearly looks like a radio. It is used like a radio, but yet it hides very complex, sophisticated technology inside that involves receiving multiple real-time audio streams, navigating across maybe 10,000 available radio stations on the internet. But we're doing this, we're creating this technology in a way that is radically simple for the user. The on-off button is where it's supposed to be. The way you select your radio station is exactly where it's supposed to be. It looks like a radio, it is manipulated like a radio, and it really does not require any particular skill to use it.
The Red Herring's Tony Perkins agrees that internet radio could be a booming business.
Radio is also a huge opportunity. Obviously, there is limitations to the broadcast model. You have to basically today listen to what's being broadcast. But with the internet, clearly audio has been successfully delivered over the internet, and that's going to be a great application for a lot of people. And this will open up a whole new market for, if you will, kind of cult radio stations to specialize on very niche content and build a global audience that's going to be able to access that audio content for the price of a local call.
3Com's new interest in consumers is driven in part by the fact that there is a growing market not only for network appliances, but also for home networking products.
Today, in the States only, there's about 20 million households that have 2 PCs or more. And these households qualify as digital homes, places where you will see a network, where you have PCs, telephones, appliances, new services coming together. We focus on this opportunity. And the key enabler for us is the deployment of broadband into these homes. Once you have a broadband connection, then it makes it possible for all of these environments, these digital home environments, to be created and to grow.
The other home appliance that seems to be playing a bigger role in the internet is the television set, with Microsoft and AOL trying to put the net on your TV. The big issue here is whether every content provider will have access to a television-based internet. The cable networks are toying with a concept called the walled garden, which would build a proprietary internet sub-universe inside your TV set.
It's a little different from the wide open internet, is that network operators decide, for example, through negotiations with programming providers, which TV channels they're going to carry on their cable or on their satellite. So similarly, they have some discretion about the licensing they do. So although you may buy Yen's cookbook, they may cut a deal that says that when you click on the I want to buy this book button, that it goes to a local bookseller or somebody with whom they have a deal, rather than to necessarily Amazon if they don't have a deal. Some cable companies and others will open up their television to web browsing. You can go directly to Amazon and buy the book. Some will do what is called in television walled gardens. That is, there will be a set of content that they have deals for and that they provide, and that you won't be able to go out to the internet, but it will be based on internet standards and internet websites.
One of the cable companies planning a so-called walled garden approach to the internet is AT&T.
It will start with a walled garden service from AT&T. It will include capabilities like email and eventually instant messaging, chat, commerce, and my guess is, at least on the high-end boxes, set-top boxes, AOL, I'm sorry, it's a slip, AT&T will allow you to do web browsing and all that. But you know, we are primarily the infrastructure supplier. We don't supply the content. Our partners supply the content.
While there is interest in the consumer on the internet TV side, as you've heard, there weren't too many people here pushing new consumer-oriented web businesses. But the overall view here was that B2C is not dead.
B2C and B2B are very much well alive and kicking. It's just not every B2C company will make it. Most won't. But you know, there'll be some very strong survivors. You know, trillions of dollars, certainly hundreds of billions will be spent on the internet, and it's spending on the internet is growing dramatically. So, and people, it's a convenience to buy on the internet. There are a lot of reasons why people buy on the internet. So by definition, if people are going to do it, companies will be profitable that will supply the services. It's just not all of them will be.
Ironically, it is the very focus on B2B and infrastructure here that is forming the basis for what some see as a revival in B2C.
The B2C is the next best thing in the net economy. Why? Because people have found solution, infrastructure solution, backbone solution to the B2C biggest enemy: lack of predictability, lack of logistics, lack of ability to pay, lack of ability to see the product and understand what you're buying online without touching those products. Those 4 problems are being solved one by one, and because of that, it's making life easier and life more fluid for those people who are actually performing in that space.
That's it for this week's coverage of the annual European Technology Roundtable and Exhibition. In our final program on ETRE, we'll show you the latest in wireless technology, including the newest developments in the mobile internet, and we'll tell you why analysts here think Europe is the next big internet bull market. For the Computer Chronicles, I'm Stuart Chaffee in Prague, Czech Republic. Computer Chronicles is made possible in part by PC to PC, the online computer migration service from PC First, moving files, applications, and preferences from your old computer to your new one. Additional support is provided by Upside Events, presenting the Digital Lifestyle Revolution Conference, where people and technology intersect.
To purchase a videotape copy of today's program, call toll-free 1-888-310-7850. Please specify the show number and the topic.